Hello, I'm Robert and welcome to my channel, where I discuss everything automated algorithmic trading, or simply algo trading. Last week was a wild one for Euro USD, but lately they all seem to be wild in terms of the action day by day. That is what we are going to talk about today. Last week was week 14 of the year. And as we can see by the gray bars marking out the Mondays, the bulls really had a field day last Monday, picking up where they left off from the prior week on that, where they really pushed the market down quite a bit. But as we can see from Tuesday through the rest of last week, the bulls weren't going to sit still and they wanted their profits back. And what a tug-of-war the week was. Up and down, back and forth. Day by day, you never knew which way the market was going because it was such an aggressive state. But overall, the range held. As we can see from the yellow lines, the total range from the last 172,000 data bits is still reasonably within the same place as it was for the prior week. The range has shrunk some, but not enough that I believe that it's going to really affect the overall market. The thing that stands out the most, though, is the orange lines and purple lines. The orange lines being the order book volume, and the purple lines being the frequency weighted count based upon volume and price action. For the buy side of the order book, it aligns well with the frequency weighted count of the order book at 1.079. This is rather important because that means that the order book is pretty much made clear this is the lowest it wants to go at the moment. So both buyers and bulls, which may be one and the same in this case, are saying they want higher prices for Monday's session. So I think Monday could see a bump in price. Having the order book volume and the frequency weighted separated on the bearish side means that sellers are looking for higher prices based upon where prices have been previously, but they're willing to accept a slightly lower value just to get those little bits of profits. Also, the bears have set up quite a bit of resistance within the order book to try to keep price from going higher. But we've seen, particularly when you look at some previous examples just within last week, where the bears would set up 45 or 50% resistance levels within the order book, and the bulls still blew past it like it wasn't even there. So I don't believe that we should count the bulls out in their ability to drive prices up, even when the bears have a very strong resistance level. I think as we progress forward throughout the week, we're not going to break the range, but we are definitely going to see the order book dynamics change aggressively and significantly. I think we're a long ways away from breaking either the upper or lower boundary of the total range. And the fact that the range is shrinking slowly suggests that perhaps we are in a long-term squeeze for the market. But we can clearly see where the bears, when they have woken up along the way, looking through previous weeks, they have been very aggressive in their clawbacks of profits. We can see that when the bulls really want to drive price up, though, they can. As we go back quite a bit, and we can see day after day where they just pummeled the market bears and took money right out of the bears' pockets. So nothing can be taken for granted in this market at all. And really, when you look at the market as a whole, you shouldn't try to predict its direction. Just flow with it and take opportunities as you can get them. From the standpoint of next week, I don't believe the range is going to change. I do believe these are going to fluctuate quite a bit within the range. We may even see the range at the bottom grow a little more back to previous week's levels. But I don't know if that's going to really impact the market as a whole compared to the long-term state that we are in, which is a fairly stable range. And I think that is going to hold out as we go back and look at previous models or previous weeks. We are realistically at 172,000 data points every single week. Basically, we're looking at 40 days of data to determine where the order book is actually sitting. And it has proven to be quite consistent over time in relation to what the buyers and sellers are really wanting. As we continue to go back further and further, we can see that really the range has been reasonably consistent since around January 15th of this year. And without having any real metric to say otherwise, there's no reason to believe it's going to change in the short term or even over the course of the next month or so. But we'll see. The bears have surprised us before, and so have the bulls. The dynamics between both of them have been quite aggressive, as we've seen the high of the range and the low of the range be tested just within a very recent amount of time. So what strategies would work best? Well, I think a grid strategy will work well as long as you have proper stop losses to keep it from running away. But overall, anything that tries to follow the trend should work reasonably well on the longer terms. The shorter terms will probably be a bit of an accumulation or scalping cycle, maybe short range support and resistance levels based upon the order book would be a good indicator of when to get in and get out of the market. But again, no matter what, always test these theories out. See how they play out before you put real money on the market. Anyway, that's really all I think is going to happen for the week. It's actually been, even though it's been exciting, it's been quiet and boring at the same time, which is really what you want. Slow, consistent profits over time are the best way to get and keep stability within your trading. If you found this video useful, please give it a thumbs up. If you're not subscribed, please subscribe. Please help me grow this channel and continue to provide educational material to help you get a better assessment of what the market is. Thank you for watching.